There is an IRS credit worth up to $1,750 for married couples filing jointly, available right now in tax year 2025 returns being filed this season, and the IRS estimates that roughly 80% of eligible taxpayers over age 65 never claim it. It is called the credit for the elderly or the disabled. It is not new. It has existed since 1984. And the reason your accountant never told you about it is not because they forgot. It is because the way the credit is structured, the way the IRS communicates it, and the way tax preparation software handles it all work together to make it functionally invisible to the people it was designed to help. That is not an accident. That is a system working exactly as it was built to work. By the end of this video, you will know exactly what Schedule R is, how to determine in the next 3 minutes whether you qualify, and what deadline you are working against right now in March of 2026 if you want to claim this credit for your 2025 return or amend a return from a prior year. Let me tell you what this credit actually is, because the name alone is designed to make you skip past it. The credit for the elderly or the disabled. Most people hear that and assume it is for someone in a nursing home or someone on full disability. That is wrong. If you are 65 or older and your income falls below certain thresholds, you may qualify. If you are under 65 but retired on permanent and total disability with taxable disability income, you may qualify. The credit itself can reduce your federal tax liability by anywhere from a few $100s up to $1,125 for a single filer, or up to $1,750 for married couples filing jointly. These are not deductions. This is a direct credit, dollar for dollar off what you owe. Now here is where the burial begins. The IRS does not include Schedule R in the standard Form 1040 instruction booklet. If you pick up the 1040 instructions at your local library or download them from irs.gov, you will find reference to dozens of schedules and forms. Schedule R is mentioned, but it is not explained in any meaningful way within those instructions. You have to go find IRS publication 524, which is a separate document titled Credit for the Elderly or the Disabled. And even that publication, when you locate it, reads like it was written by someone who was told to make the information technically available while making it practically impossible to use without professional help. The formulas are layered, the worksheets reference other worksheets. The income thresholds are not stated plainly. They are buried inside a calculation that requires you to already understand adjusted gross income, non-taxable Social Security benefits, and certain exclusion amounts that change depending on your filing status. Think of it this way. Imagine your grocery store has a policy that gives you 20% off your entire bill every Tuesday. But the only place that policy is written down is in a binder behind the customer service desk, in a section labeled Miscellaneous Adjustments, paragraph 9, subsection C. The cashier is not going to tell you about it. The weekly flyer does not mention it. The store app does not alert you. The discount exists, it is real, it is yours. But the architecture of the store ensures you will almost certainly never use it. That is exactly what the IRS has done with Schedule R. And it gets worse. The major tax preparation software platforms, the ones millions of seniors use every year, either skip the Schedule R eligibility screening entirely or bury it so deep in the interview process that most users click past it without realizing what they missed. I spent 27 years inside the IRS. I reviewed thousands of returns filed by taxpayers over 65. The number of times I saw Schedule R attached to a return prepared by commercial software was staggeringly low compared to the number of taxpayers whose income clearly placed them within the qualifying range. The software is not designed to help you find this credit. It is designed to move you through the process quickly so the company can report high completion rates and customer satisfaction. Your benefit is not their priority. Let me give you the real scope of this problem nationally. The Treasury Inspector General for Tax Administration has repeatedly flagged the low utilization rate of this credit. Their estimates suggest that hundreds of millions of dollars in credits go unclaimed every single year by eligible seniors. Not because the seniors did something wrong, not because they are cheating or confused, because the information architecture of the federal tax system is designed for compliance, not for benefit delivery. The IRS is built to collect. It is not built to hand you money. And every form, every publication, every software partnership reflects that priority. Now let me make this real for you, because numbers on a national scale can feel abstract. I want to tell you about three people whose situations I have seen repeated thousands of times across the country. The first is a woman I will call Margaret. She is 71 years old. She lives in Ohio. She has been widowed for 6 years. Her total income is approximately $22,000 a year. About 17,000 of that comes from Social Security, and the rest comes from a small pension her late husband earned working for the county. Margaret files her own taxes every year using a free online filing tool. She has never heard of Schedule R. She has never seen IRS Publication 524. She does not have an accountant. For each of the last 3 tax years, Margaret has owed between $200 and $400 in federal income tax. If she had filed Schedule R, her tax liability for each of those years would have been reduced to zero, and in at least 1 year she would have seen a small refund. Over 3 years, Margaret has overpaid the federal government by roughly $900. That is $900 out of the pocket of a 71-year-old woman living on less than $2,000 a month. And nobody told her, not the IRS, not the software, nobody. The second person is a man I will call Richard. He's 67. He lives in Arizona. He retired at 62 and started drawing Social Security early, so his monthly benefit is about $1,480. He also takes a small required minimum distribution from an IRA his employer set up for him decades ago. His total annual income is approximately $24,000. Richard pays a tax preparer $65 every spring to do his return. That preparer has never once mentioned Schedule R, not once in 5 years. When I see situations like Richard's, I ask the question nobody wants to ask. Did the preparer not know about the credit? Or did the preparer decide it was not worth the extra time for a $65 fee? Either answer is a problem. Richard has overpaid his federal taxes by roughly $600 to $700 over the past 3 years. The third is a couple I will call James and Dorothy. They are 68 and 66. They live in North Carolina. James receives Social Security of about $1,900 a month. Dorothy receives about $800 a month from Social Security based on her own work record. Together, their annual income is approximately $32,400. They file jointly. They use a commercial tax software product. The software never asked them about Schedule R. Their combined federal tax liability last year was approximately $560. With Schedule R properly filed, that number drops to under $100. Over 3 years, they have overpaid by more than $1,000. That $1,000 is real. That is a property tax payment. That is 3 months of supplemental insurance premiums. That is medication. That is not an abstraction. Now I want you to ask yourself one question, not a rhetorical question, a real one. Pull out your 2025 tax return or your most recent completed return. Look at line 11, your adjusted gross income. If you are 65 or older, or if your spouse is 65 or older, and that number is below $25,000 for a single filer, or below $32,000 for married filing jointly, you need to look at Schedule R right now. Tonight, not next month, not next year, right now, because you may have been overpaying for years. Here is what they buried. The credit for the elderly or the disabled is governed by Internal Revenue Code Section 22. That is where the statutory authority lives. The operational details are in IRS Publication 524. The form you file is Schedule R, which is attached to Form 1040. The credit calculation starts with a base amount. For a single filer 65 or older, that base amount is $5,000. For married filing jointly where both spouses are 65 or older, it is $7,500. For married filing jointly where only one spouse is 65 or older, it is $5,000. From that base amount, you subtract the non-taxable portion of your Social Security benefits and any other non-taxable pensions. Then you subtract the amount by which your adjusted gross income exceeds a threshold, which for single filers is $7,500 and for joint filers is $10,000. The excess is divided in half, and that amount is also subtracted. Whatever remains after those subtractions is multiplied by 15%. That final number is your credit. I know that sounds complicated. That is the point. It was made complicated so you would not do it. But the math itself takes about 4 minutes with a calculator. The IRS designed this calculation to look harder than it is. Publication 524 walks through it step by step, but the publication itself is 32 pages long for a calculation that could fit on an index card. 32 pages! For a credit that most qualifying seniors could compute on the back of an envelope if someone simply told them the 5 numbers they need. Those 5 numbers are your base amount, your non-taxable Social Security, your non-taxable pension income, your adjusted gross income, and the income threshold for your filing status. That is it. 5 numbers. Subtract, subtract, multiply by 15%. Done. Now let me tell you where to verify everything I just said. Go to irs.gov, search for Publication 524, download it. It is free. It is public. It has been public for decades. Then search for Schedule R. Download the form and the instructions. Read the instructions. They are shorter than the publication and more direct. If you want the statutory language itself, Internal Revenue Code Section 22 is available through the Cornell Legal Information Institute website, which is free and does not require any login or subscription. Or, I also want you to know what is happening right now in 2026 that makes this more urgent than it has ever been. The IRS has been operating under significant budget pressures. Staffing at taxpayer assistance centers has been reduced in many regions. Hold times on the IRS toll-free line have increased substantially since late 2025. The Volunteer Income Tax Assistance Program, known as VITA, and the Tax Counseling for the Elderly Program, known as TCE, are still operating for the 2026 filing season, but the number of available sites has decreased in several states due to funding constraints and volunteer attrition. If you rely on free filing help, your window to get in-person assistance is narrowing as we move deeper into March. The filing deadline for 2025 federal returns is April 15th, 2026. That is weeks away. If you need to file Schedule R with your return, you need to act now. If you need to amend a prior year return to claim a credit you missed, you can file Form 1040X for any return within the 3-year amendment window. That means right now you can still amend your 2022, 2023, and 2024 returns if you missed this credit in any of those years. Let me explain why your accountant probably never brought this up, and I want to be precise about this because it matters. There are 3 reasons, and none of them are flattering to the industry. The first reason is time. Most paid tax preparers working with clients in your income range are operating on very thin margins. They are charging between $50 and $150 per return. At that fee level, every additional form and every additional calculation reduces their effective hourly rate. Schedule R requires a separate worksheet, verification of non-taxable income sources, and in some cases a review of Social Security benefit statements. For a preparer handling 30 returns a day during peak season, that is time they do not want to spend for the fee they are charging. So they skip it, not maliciously, economically. The incentive structure of the tax preparation industry is not aligned with your interest in paying the lowest legal tax. It is aligned with volume. The second reason is knowledge. Many preparers, particularly those working at the large national chains, are seasonal employees with limited training. They learn the common forms, they learn the common credits. The earned income tax credit gets attention because it is large, it is well known, and the IRS actively promotes it. The credit for the elderly or the disabled does not receive the same promotional effort. The IRS does not send letters to potentially eligible seniors the way it sends letters to potentially eligible EITC claimants. There is no public awareness campaign. no billboards, no inserts in social security statements. The credit exists in a promotional vacuum, and many preparers simply do not know enough about it to raise it with clients. The third reason is software design. I mentioned this earlier, but it deserves emphasis. The interview flow in most commercial tax preparation software is designed to handle the most common scenarios efficiently. Schedule R eligibility is not a common scenario, not because few people qualify, but because few people claim it. The software treats low utilization as evidence that the credit is niche, so it buries the screening question or omits it entirely. This creates a feedback loop. Few people claim the credit because the software does not surface it. The software does not surface it because few people claim it. The circle closes and seniors lose. Now, here is what I want you to do. And I'm going to be specific because vague advice is worthless. Step 1. Determine your eligibility. If you were 65 or older at the end of 2025, or if you're under 65 and retired on permanent and total disability with taxable disability income, you meet the first requirement. Then look at your adjusted gross income. For single filers, if your AGI is below approximately $17,500, you almost certainly qualify for some amount of credit. For married filing jointly, if your combined AGI is below approximately $25,000, you're likely in range. These are approximate thresholds because the exact cutoff depends on your non-taxable income, but they give you a starting point. Step 2. Get your Social Security Benefit Statement. This is SSA 1099, which the Social Security Administration sends every January. It shows your total benefits received and helps you calculate the non-taxable portion. If you cannot find your copy, you can access it through your My Social Security account at ssa.gov. Step 3. Download Schedule R and its instructions from irs.gov. Work through the worksheet. If the math intimidates you, call the IRS at 1-800-829-1040 and ask for help with Schedule R. Or locate a VITA or TCE site near you by calling the same number or visiting irs.gov and searching for free tax preparation. Specify that you need help with the credit for the elderly or the disabled. Do not assume the volunteer will bring it up. You bring it up. Step 4. If you already filed your 2025 return without Schedule R and you believe you are eligible, you can file an amended return using Form 1040X. You can also amend 2022, 2023, and 2024 returns. Each amendment is a separate Form 1040X. You attach the corrected Schedule R to each one. Mail them to the IRS address listed in the 1040X instructions. Amended returns cannot be e-filed through most software platforms, though the IRS has expanded electronic amendment options in recent years. Check irs.gov for the most current filing method. Step 5. If you use a paid preparer, bring this up at your next appointment. Do not wait for them to mention it. Print out Publication 524. Bring your SSA 1099. Bring your prior year returns. Ask them directly whether Schedule R was considered. If they say they did not think you qualified, ask them to show you the worksheet with your numbers filled in. You are entitled to see that math. I want to close with something I have said before on this channel and will keep saying until it changes. The tax code is not written for you. It is written for the system. The forms are not designed to help you pay less. They are designed to help the IRS process more. The credits and deductions that benefit working people and retirees are not advertised. They are archived. They sit in publications that nobody reads, on schedules that nobody files, inside software that nobody programs to ask the right questions. The credit for the elderly or the disabled is not a secret. It is public law. It is printed in black and white in the Internal Revenue Code. But functionally, operationally, practically, it might as well be classified, because the people who need it most have never heard of it, and the people who prepare their taxes have no financial incentive to bring it up. That is not a conspiracy. That is a design, and now you know about it. Go to irs.gov tonight. Search Publication 524. Download Schedule R. Run your numbers. April 15th is coming, and every day you wait is a day that credit sits unclaimed with your name on it. My name is David Chen. I worked inside that building for 27 years, and everything I just told you, they already know.